Hello, everyone, and welcome back to the Financial Freedom Show. If you're new here, I like to talk about personal finance, investing, and how to make your money work for you. In today's video, we're going to dive into the JPMorgan Nasdaq Equity Premium Income ETF, which is commonly known as JEPQ. We'll dive into what JEPQ is, how it works, its performance, and whether it might be a good addition to your investment portfolio. So without further ado, let's get started. So first things first, what exactly is JEPQ? JEPQ stands for the JPMorgan Nasdaq Equity Premium Income ETF. It's an exchange-traded fund managed by JPMorgan, which is one of the largest and most reputable financial institutions in the world. JEPQ aims to provide investors with income and potential capital appreciation by investing in Nasdaq-listed companies, while also utilizing an options overlay strategy. The primary goal of JEPQ is to offer investors with exposure to a diversified portfolio of large-cap Nasdaq companies while generating additional income through the use of covered call options. This unique approach can potentially provide a steady income stream while allowing for capital growth. Now let's talk about how JEPQ works. When you invest in JEPQ, you're buying shares of an ETF that holds diversified portfolio of Nasdaq-listed stocks. The fund's holdings are well-known companies like Apple, Microsoft, Amazon, and a bunch of others. In addition to holding these stocks, JEPQ uses a covered call option strategy. This involves writing call options on a portion of the fund's stock holdings. By selling call options, the fund collects premiums, which can provide additional income. However, the strategy can also cap the potential upside of the stocks if they appreciate significantly. The combination of equity exposure and options income can help enhance the overall yield of the fund, making JEPQ an attractive option for income-focused investors. Now let's take a look at JEPQ's performance. Since its inception, JEPQ has provided a solid income stream while participating in the growth of the underlying Nasdaq stocks. However, it's important to remember that past performance is not indicative of future results. One of the advantages of investing in JEPQ is its competitive expense ratio for a covered call ETF. The expense ratio for JEPQ is currently 0.35%, which is reasonable given the fund's active management and options strategy. Additionally, JEPQ's covered call strategy can help reduce volatility, which can be appealing to many investors who are seeking a smoother ride in the often volatile tech sector. Now let's discuss the benefits of investing in JEPQ. One of the main advantages is the potential for enhanced income. The covered call strategy can generate additional income from the premiums collected, which can be especially appealing in a low-yield environment. Another benefit is the diversification within the Nasdaq index. By holding a broad range of large-cap tech and growth-oriented stocks, you're spreading your risk across multiple companies and industries. JEPQ also offers a unique approach to risk management. The covered call strategy can help mitigate downside risk during market corrections, providing a level of protection compared to holding individual stocks. Lastly, the competitive expense ratio and active management by JPMorgan's experienced team can provide peace of mind for investors who are looking for a well-managed income-focused ETF. While JEPQ has many benefits, it's also important to consider the potential risks. A covered call strategy, while generating income, can cap the upside potential of the fund's holdings. If the Nasdaq experiences a very strong bull market, JEPQ will definitely underperform compared to other tech-focused ETFs. Another consideration is the sector concentration. Although JEPQ is diversified within the Nasdaq, it is still heavily focused on technology and growth-oriented companies. This concentration can increase volatility and exposure to sector-specific risks. Lastly, the use of options can introduce additional complexity and potential tax implications. Investors should be aware of these factors and consider their own risk tolerance and investment objectives. So is JEPQ the right investment for you? It really depends on your financial goals, risk tolerance, and investment strategy. If you're looking for exposure to the NASDAQ with the added benefit of income generation, or you're close to retirement, JEPQ can be a great addition to your portfolio. JEPQ is especially suitable for income-focused investors who are comfortable with the risks associated with the covered call strategies and have a positive outlook on the long-term growth potential of the NASDAQ. In conclusion, JPMorgan NASDAQ Equity Premium ETF, or JEPQ, with the added benefit of income generation, with its unique covered call strategy, diversification, and competitive expense ratio, it can be a valuable addition to many investment portfolios. Here's a few final tips to consider. Always consider your risk tolerance and investment goals before choosing an investment. Understand the implications of the covered call strategy and how it can affect your returns. Diversify your portfolio to balance risk and return. And keep an eye on the performance of your investments and make adjustments as needed. If you found this video helpful, please be sure to give it a thumbs up and don't forget to subscribe for more personal finance and investing tips. Make sure to leave a comment down below if you have any questions or if there's a specific topic you'd like me to cover in a future video. Thanks for watching, and I'll see you in the next one.